Directors' salaries in 2023-2024. What might directors pay themselves to pay the least amount of tax in 2023-24 in terms of salary? Because most directors pay themselves a small salary and then dividends. So I want to look into that with the new rates of tax in this video, and I'll also spend some time looking through at the exceptions to the normal. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, please press the subscribe button. If you press the like button, it helps me in the channel, so thank you for that. So what should you pay yourself if you are a director? So directors normally receive a low salary and then dividends. They receive the low salary because they pay corporation tax at 19-25%, something like that. They pay corporation tax and then they pay the dividend tax, and that, depending on what rate of corporation tax, that's going to be something like 26 to maybe 30% tax you're going to pay overall. Sounds like a lot until you look at what you would pay as an employee. As an employee, you pay 20% tax plus 12% employees' national insurance plus 13.8% employers' national insurance, which is over 45% tax. So you're better off paying yourself dividends at the lower rates than you are paying yourself a salary. Except that the first £1,000 a month or so of salary is taxed very lightly. So for most companies, the correct low tax way of paying yourself is to pay yourself £12,570 a year, just over £1,000 a month. And that means you get all your allowances, you'll get your year for your pension, so you're going to get a state pension when you get older, and you don't pay very much national insurance. You pay some employers national insurance, maybe or maybe not. So, and that is generally the best way to pay yourself as a director. And I say generally because there are exceptions, and the rest of the video is all about the exceptions. So what could these exceptions be? Well, the first exception is you can only pay yourself a dividend if you've got profits, retained profits within the company. So if you haven't got any profits in the company, you can't pay yourself dividends. So in that case, you may well want to pay yourself just a salary because you can't pay dividends. And you say, how can you pay yourself money that you haven't got? If you've got a C-bills loan or a bounce back loan, you can have the cash, the company can keep going because in the future you can see profits, but you need to pay yourself an appropriate amount. And I can see that that could work, although you may want to speak to an insolvency practitioner if it's more than just a little dip. So if the company doesn't have retained profits and is not making profits, then you might want to pay yourself the higher salary. Or if the profits are thin, so you're not sure whether there's enough retained profits to pay a dividend or not, then that would be a good idea. Or if you think the company might go into a position where it's got a loss, what you don't want to do, of course, is for the company to do badly and then suddenly give yourself a big pay rise as a director when you transfer from paying yourself a low salary to a normalised salary. So in all those circumstances where there aren't a whole load of reserves in the business, you might want to pay yourself the sort of market rate salary, or even a little bit lower, but something like that rather than the 12,570. So that's one exception. The next exception is if you're over the retirement age. If you're over the retirement age, the tax rates change because you no longer pay employees' national insurance. That changes it, so that 45% that I talked about goes down by 12%, so it's just over 30%. And that's much more similar to what you're going to be paying, what tax you're going to be paying if you pay yourself dividends plus the dividend tax. So it's the corporation tax plus the dividend tax. They're very similar. So if you are of retirement age, then that would be something you might want to think about doing. The next example is research and development. Research and development. If it's you, the director, that's doing the research and development, it's not as simple as you might think, because not only do you pay tax on your salary, but you might receive some of that back as R&D tax credits. So if that is the case, you might just want to do the calculations and have a think about it. And the next example is employers' national insurance. For small businesses with more than one director, then generally you'll get an allowance, so you don't pay the first £5,000 of employers' national insurance. Now if you've got a very small company and you don't pay £5,000 in employers' national insurance, you might want to pay yourself more wages because you're not paying national employer's national insurance. So the cost of employing you is lower, somewhere again around the 30% tax rate, very similar to what you pay if you're receiving dividends. So again, if you can take advantage of that employer's allowance, then national insurance allowance, then that might change your decision about what to pay yourself. Because generally it is actually just more convenient to receive a salary. You pay the tax every month, you don't have to wait a year, you know where you stand. You can put, if you know, for applying for a credit card, you can put your salary at a higher level on the credit card application. It sort of saves an amount of hassle, and an amount of hassle that became very apparent when we were looking at the furlough a couple of years ago. The next reason I'm just going to touch on very briefly is that some people just don't like to pay PAYE, or they've got losses brought forward, so they don't want to accrue any more losses. So for them, they don't want to pay any employer's national insurance, which kicks in at $9,100. So that is a logical. If you just don't want anything to do with paying PAYE, or you've got losses, you might want to pay yourself $9,100 a year. So that's perhaps another alternative. So I thought of lots of reasons why you might not want to pay yourself $12,570 a year, but for that, these reasons do not apply to the vast majority of people. So the vast majority of directors, I would expect to earn $12,570, just over £1,000 a month. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, please subscribe to the channel, and if you press the like button, it helps the channel, it helps me, so thank you for doing that. Thank you.